Welcome back. You're watching CNBC TV18 and we are in conversation with Anish Shah, the Managing Director of Mahindra Group and the new President of Federation of Indian Chambers of Commerce and Industry. How do you see the auto sector finishing this fiscal year?
So it's been a strong year overall for the auto sector. And our sense is that that continues as we go forward. From a Mahindra standpoint, the demand we've seen, the bookings we've seen have been at a high level on a sustained basis, and that is a function of the products that we have as well. So at this point in time, we don't see any signs of that slowing down.
Right. Overall, what kind of industry electric vehicle penetration are you expecting by 2030 at an industry level altogether?
So I would look at it first in terms of three key milestones. The first is born electric products coming into the marketplace in a significant way. We will launch 5 born electric SUVs starting next year. The second is what we look at around 2027. We'd expect 20 to 30% of our vehicles as electric. My sense is it's going to be closer to 30%. Because if we put a born electric vehicle and an ICE vehicle next to each other, most consumers will prefer a born electric vehicle. The question will be on charging. And in the short term, consumers who can charge at home are likely to take electric vehicles or in office because infrastructure will take some time to build. And that's going to be the key factor that will drive the inflection point beyond 20 to 30%. And by 2030, we'd expect that to go to 50%. We've committed to be able to manufacture 1 million SUVs alone in 2030, both for India as well as for the rest of the world. So we'll see a fairly rapid transition once born electric models are out.
Right. Now, speaking about FAME, and recently FICCI as an industry body had submitted a representation where they felt that incentives should continue. How important is it to have FAME 3? Will it be a setback for the industry if incentives are stopped abruptly in March next year?
Incentives always have to be seen in the broader construct, which is what is the value of the incentive to the economy? I've never believed that it should be just for companies. Yes, while I come from a corporate background, and it's nice to have incentives, that's not sustainable. So FAME was set up to encourage and accelerate production of electric vehicles. And a lot of that has been achieved so far. There are still aspects where there is a gap between cost of electric and ICE, and that's where FAME comes in terms of being able to plug that gap. Over time, that gap is going to reduce. As scale develops, as battery technology improves, as cost comes down, and therefore, it's important for it to continue in some form. It can be pinpointed as to where it can really add value. But we've got to look at those incentives in the context of how does it benefit the economy in terms of driving change into a product set that's going to be better for the economy going forward. So those are the set of considerations I think we will need to have for FAME 3. And it may not be the entire set of things that are required for FAME 3, but within that set, we may have to look at certain aspects and say these aspects really are essential for continuation.
Right. So be it incentives on vehicles, be it incentives on charging, you feel that should continue?
Because that will help transition the industry. And we still have a long way to go in terms of that transition.
Right. Now, there is a lot of talk about Tesla coming to India. The Indian government is talking to them. There is consideration of a new electric vehicle manufacturing policy, which will incentivize investments by giving a duty concession for a limited time period till the company starts manufacturing in India in lieu of an investment commitment. How do you see a policy proposal like this? We've not seen anything so far, but yes, Tesla is batting for a duty reduction from 100% to 15% on fully built cars, and the government seems to be considering a policy for all automakers.
So as FICCI, it's not right for us to comment on specific companies, but all I would say is that India is in a great position. And we would love companies from all over the world to come to India and invest in India. If you believe in India, invest in India.
But about the duty concession, this new EV manufacturing policy?
As I said, policy details we'll look at when they come out. Right? But in order to drive India's growth, we need investments in India. We need Indian companies to invest. We need global companies to invest. So our focus is going to be more on how do we facilitate those investments to happen.
Right. I would like you to probably reflect on what the chief economic advisor said very recently, and he said this at the FICCI forum when he spoke about India as a growth engine. He said optimism should not become a cause for premature triumphalism. He said we still have a long way to go. We have mountains to climb before we reach our destination. Do you think it's important to somehow reduce the euphoria, reduce the expectations that we have? Do you feel that there is too much of euphoria in the economy currently, in the markets?
Markets is an area where I'm not an expert, so I shall leave you to get opinions from all the experts. There are two elements to this. First is we have to celebrate our successes. That's different from euphoria. But that's based on celebrating what we have achieved so far already. And the second is we've got to have high ambitions for the future. So I think that's something we see going well right now. Yes, that sometimes leads to euphoria as well, but as I said, I'm not an expert on markets, so there'll be others who can shed more light on that part.
All right, my final set of questions. When it comes to the global economic environment, what are some of the challenges that you see for the Indian economy right now?
Two primary challenges. One is on geopolitics. Can the current set of conflicts escalate into something bigger? That would be concerning not just for India but for the whole world. And second is around the economic uncertainties that we've seen that haven't fully played out as yet. So what will happen in the West over the next 6 to 8 months will impact India. We are hoping it will be a soft landing, but there's a chance it may not. And in which case, we will face certain consequences as a result of that. The positive is that the Indian economy is on a very good track right now. Give a lot of credit to the RBI for proactive action on a number of areas that have really helped contain inflation. That's gone off the headlines completely now. And we've got a strong control on the economy, so that I think is very positive. So that will help us if there is a global crisis. And frankly, if there is, I think Indian companies are very well placed today as well in terms of various war chests, deleveraged balance sheets, etc. And that should be a crisis that India should take advantage of. As the old saying goes, never waste a good crisis.
And finally, does the election result recently in 3 states give you the confidence that there is continuity in the economy, there will be continuity of policy?
That does give us a confidence, but again, politics is not my expertise, so I shall stay away from that as well. Shall come back to the economic part.
All right. Thank you, Mr. Anish Shah, for joining us. So that was Anish Shah's prediction, the new president of the Federation of Indian Chambers of Commerce and Industry, saying that he expects the Indian economy to grow by 8% next fiscal and a significant growth in private capex as well. That's all we have time for. Thank you for watching. Goodbye.